Wow, what a wild past few trading days we've had. Last week the market was crashing and never coming back, and then this week we're back to the moon again. But prices in many stocks we love are way off all-time highs, and I mean like 50%, 60%, 70% or more in some cases. So it must be time to pile in, right? I mean, it's basically like shooting fish in a barrel, just buy everything at these prices. Well, the truth is, that's not really the truth, and there is a massive mistake many of you may be making that will leave you being the one with a down portfolio while the rest of us are on the next real rocket ship to the moon. So we will cover this today in great detail in exchange for just a gentle tap of the like button, or smash it if you just gotta do that, and consider subscribing to the channel too, as it's super easy to do. And if you want 4 free courses that teach you how to plan, do evaluation, build up your cash, and have direct access to me, my watch list with price targets, my buy and sell alerts, and chat with me on the live weekly Q&As, and get access to a ton of exclusive videos and a bunch more, consider joining the Market Insiders private group, where if you missed the Black Friday sale, don't worry about it guys, I got you back. I gave it one more extension through this weekend, and prices are never going to be lower than this again, so check out the pinned comment if you're interested. And before blasting me for promoting it, I have no ads, no sponsors. This is what YouTube pays me in a month, and I give half of that and half the group's proceeds to charity. Now, I've been seeing this mistake everywhere. I see it in the comments, in the pumper videos, and even in my group, basically everywhere, so I know it's real. And that is, some of you are basing some of your buying decisions on where the stock is in relation to its all-time high, and even worse, you may not know you're doing it, and that is incredibly dangerous. So what, you may say, I'm not doing that at all. I just love this company and they have a bright future ahead of them. Well, that could be true, but let's dig a little bit deeper to make sure, and I will give you the 3 things to help you avoid being swayed by the all-time high discount. So first, let's go over why I never really even look at the all-time high. And that's because the all-time high really tells you nothing, especially with high growth stocks. Even if the company is great and growing at an incredible rate, the all-time high doesn't really tell you much. Think about all the people who bought Tesla on the dip in 2013 based on the argument that Tesla was way off from those all-time highs they set at the time. And honestly, you would have been right, eventually. But the real question is, if you bought that dip, did you have the intestinal fortitude to hold for 6 years with no gains, because it did run out so far so early? And that's with Tesla. Think about that penny stock or SPAC stock that still hasn't broken ground yet, or is promising a game-changing product that isn't really real yet, and basically, is that in the same category as Tesla? The reality of this situation is many of the hot stocks last year will not last. And I'm not saying it's all of them, so slow down and don't blast me. But there are many who will always trade at or below that all-time high price, or in some cases won't even be around in a few years. The market does not care what the all-time high price of a stock is. A good investor does not care about all-time highs, and let me give you an example to illustrate why it doesn't matter in the long run. I have bought Apple at all-time highs many times, and at 52-week lows too at sometimes. Over the long run, it honestly hasn't freaking mattered. Heck, if you bought Tesla at its all-time high in 2019, you have 10x your money since then. But if your biggest reason to invest in a stock is based on the fact that a stock is off from its all-time highs by 50%, 60%, 70%, whatever, you are asking for a stock market spanking. Sorry, it just kind of came out, but that's what you're asking for. So how the heck do you avoid this mistake? What does actually matter, and how do you confidently invest when stocks are at all-time highs? Well, there are 3 things I actually want you to focus on that will let you know if a stock is truly on a discount and worth buying, or if a stock's worth buying at all-time highs. And the first would be valuation. And I know I say it a lot and I won't drag it out on this video. You can actually click right up here for more details, but valuations always eventually matter. And if you are overpriced by 70%, guess what? After a massive fall, a stock may still be overvalued and not on a discount based on the valuation. All right, moving on to the second, is you got to answer the question, is this company still speculative or not? And I know I said speculative wrong, I'm sorry, I just can't say that word very well. This one can be tough, as we all want to get in on the next great thing as soon as possible. But unfortunately, in downward trending markets like we're in right now, the last type of stock you want to be messing with is speculative stocks. And with the tapering coming and interest rates going up, speculative stocks are the ones who are going to get hit the hardest. And if they're pre-revenue, can they survive an extended downturn if it happens? Basically, do they have the cash to do that? And I'll tell you right now, most investors are not willing to take that risk in this environment, so that can push the stock much lower than you ever thought it could go. And finally, what is the future growth of the company? Now, I'm not talking about a video talking about revenue in 2030 or even 2040 or 2050 or whatever. And yes, I have seen those, and it's utter speculation to be guessing revenue that far out. I'm talking about actual estimates put out for the next 12 to 24 months by analysts, or even better, the company puts out those numbers in their last earnings call. That gives you a far better idea as to how much they are projected to grow, but you have to then do the analysis on the data. Are their competitors seeing their growth rates accelerate? And what about the stock you're looking at? Is it seeing growth, but the rate is actually declining while their competitors are all actually increasing? Is the reason the stock you want to buy is on such a discount is because Wall Street doesn't get it, kind of like Palantir, or is it because they are the biggest loser in the field? How about the industry in general? Are there headwinds or tailwinds ahead for that industry? And then after you adjust for all of that, what does it do to the valuation? So bottom line, basically tie these three things together and then see if the stock is truly on a discount with a runway for some great share price appreciation based on the numbers to back up that elevated share price. This should help you out a lot more with identifying actual discounts and not just falling for the all-time high discount. But I want to hear from you guys. What stocks are you buying in this downturn? What are your highest conviction plays? I mean, seriously, I want to know. I love hearing what you guys are looking at. So thanks for watching, and we'll see you in the next one.